Hey everybody, welcome back to the channel. Hope you're having a wonderful 2024 so far. Today we're going to be looking at the most underrated stocks going into this year. Everyone has a different definition of what underrated means. My definition and what we'll be looking at, we'll look at a growth stock that is underrated, we'll look at an income stock that is underrated, and we're going to look at a value stock that is underrated. Those three different categories are essentially the main areas you want to focus in depending on what your risk profile is. Again, the growth stocks are typically more for the younger people who can go through the volatile times of the ups and downs. The value stocks are the ones that are the stocks that you can buy that are staples. That stocks you know of. Think of like your Home Depot, like the Dow Jones, essentially your Home Depot, the Dell, Microsoft, Apple, etc. Think of stocks that, and it doesn't have to be big companies, it can also be small companies. It's essentially companies that are trading less than what analysts and big hedge funds, professional people who are certified and licensed think the stock price should be. So those are value stocks. And I did growth, value, income, dividends. You're getting income every month, every quarter, every half year, depending on whatever the monthly pay or the interval payout is. That is income. You're getting dividends every X amount of time. So underrated to me essentially means the stock is got a low PE. It has high gross margins, depending on if it's growth, income, or value. Basically, like if we're going to dissect each category right now, growth stocks are going to have high gross margins, low debt, institutional insider buying, cash. We want to see cash because we want to be able to see that company acquire other companies to build up an empire, essentially. So that's kind of the growth. Value, we want to see a low PE, low forward PE. We want to see analyst price targets high and the current stock price low to see where the gap is and if we can identify stocks that are under the radar, essentially, for value stocks. So we're also going to look at their debt, assets, liabilities. We also want to have some insiders and institutions holding some as well, just for a good measure that there is some attraction to the stock. There is some I can't think of the word. There's some demand. So we'll see that there. And then for income, we also want to look at we can look at 1 to 7% dividend income stocks. We want to see dividend stocks that have been positive year over year for the past 5 years through the Great Lockdown. We want to see institutions, insiders holding. We want to see that it's in a good, stable sector. For example, we don't want to find a good paying dividend stock that's only in retail, for example. Retail is great, but I mean, it has its ups and downs, it's volatile. The dividend payout is going to be much different month over month, year over year. So those are essentially what I consider to be underrated. Let me know what your definition is and I can do a separate video, but let's go ahead and jump on in. All right, we are on finviz.com and we're going to look at all the different financial parameters here to ensure we find the best. We'll start with growth, then we'll do income and then value. And can you guys see the full screen? Exchange all the way down to after hours change? Yes, okay. All right, so for growth stocks, we want gross margins to be high. So over 30% gross margins. Where are you? There you are. Over 30%. We want to have a high quick ratio. So probably like 4, over 3 or 4. Let's do over 4. Long-term debt to equity. I mean, if it is a growth company, they could have debt, so I don't want to rule them out. Let's look at PE and let's look at under 20. Ooh, there are some that exist. Okay. Okay, and let's look at the float. What's trades? Let's look at the float under 100 million. All right. We want to see profit margins as positive. Profit. Net profit margin, is that it? Positive. All right. EPS growth this, or let's look at next year, which is going to be 2024. We want it to be over 25%. Down to 7. Okay. Let's take a look at these 7 growth stocks. Car Group, let's look at them all. All right. So again, we're looking at high growth, underrated stocks. I think what we're going to want to see here is we're going to want to see some institutional and insider buying. Looking at Car Gurus, I don't know what this company is about. Auto and truck dealership. Ooh, that screams normally debt to me. Wow, look at this. You cannot argue with that type of sales. That's amazing. This is amazing. I want to look at their debt or their assets and their liabilities. Total assets, 927 million. Total liabilities, 192 million. Wow. That is amazing. And I think there's some, we can see over on the right side, there's some institutional buying. Okay, insider transaction. So insiders own 23%, institutions own 78%. I'm gonna guess it's higher than that. So we're gonna look and see Fintel, and we're gonna look at CARG. I think institutions might own more than that. Old data shows that institutions own 78%. New data shows 97%. Whoa. That's freaking crazy. Look at this chart too. That's pretty crazy. That is wild. I'm not gonna lie. Vanguard increased their stake. BlackRock increased. Par Investment increased. Manulife decreased. Aeromark Colorado, huge position. Wellington Management decreased. Steinart Langley decreased barely. Wow, that's craziness. That's crazy. So let's run my calculations on this and see what this could be, because this looks wonderful. Honestly, this looks really good. Yeah, I see a lot of upside too. Okay, so let's run the numbers. So I'll run this and talk you guys through it. So I want to add the market cap. If the market cap's over 1 billion, and it is 2.7 billion, so it is over. There's 2.7 billion market cap plus 214,090,000 in income. That's good for them. Sales is almost a billion, 977,860,000. Great. Now we're going to take the total cash, which looks like it is 496,520,000. 496, 469. 520,000 minus total debt, which is 0 debt. What? That's crazy talk. Okay, and we're going to take this and divide it by 86 million, 10,000. $16 stock price, trading at 24. Ooh, this is rich. The stock price is ahead of itself, but it's got a lot of momentum. It's got strength, it's got momentum, it's got money flow. Relative momentum is also going up. Wow. Okay, so in terms of support, we'd want to see it potentially come back down to 20. But we can see the apex is going to be about right here. So, man, that's really tough. I mean, that's not straight. So, $16 stock trading at 24. Analysts have it at $24. So, I think it's trading pretty rich, honestly. Um, it's trading rich, so I would have to pass on it. But I think this one, if you're a momentum person, keep an eye on this one. I'm going to keep an eye on this one. We're going to pass on it for now. Okay, this is communication equipment, and we're going to look at the monthly chart, but it does not want to load the monthly chart, which is weird. Okay. Wow, the stock went from literally $8 to 130, back down to 20. Have we bottomed? Is it reversal time? I think so, possibly. This looks okay. This looks okay. What does this company offer? Design, manufacture, distribution of fiber protection. So they work in cabling, fiber and cabling. Nice insider buys at $30 and $60. Oof, and the stock is now 29, so good premium for in retail, but I think if you look at the market of the psychology of the stock market, this shows us that there's still more downside here. Yeah, we're gonna pass on this one just because I think there's still more downside that needs to happen on this one. But I mean, good potential, good momentum here if you wanted to keep an eye on this, but we're gonna pass. All right, Coda is a defense group stock, trading near its lows. They do 20 million in sales. I mean, it's reversing nicely. EPS is kind of flat over the past 5 years. Low float stock, it could be easily manipulated, but I think we might have to pass on this one. It's good to see insiders buying, but it's very risky. It's 20 million. Yeah, it's high risk, high reward, so think in that nature, but I'd have to pass, honestly. It looks like it also could be doing a inverse head and shoulders, so left shoulder, head, right shoulder. So you could keep this one on your watch list. Here's some areas to watch for, basically. Here's our apex. Again, I'd give it some time. We could see a nice spike up to around 850. It could, again, go higher. Yeah, a little quick deeper look here. Let's look at Coda on the yearly. Yeah, the yearly momentum. Yeah, you guys can see it's heading downward. So we'll pass on Coda. InMode Limited. Medical Devices Israel. It's hard to talk about Israel companies right now because what's going on? This is beautiful. This is good. I mean, you can see a pattern. Definitely consolidation, move up, consolidation, move up, question mark? I don't know. Let's run the numbers on this one because I'm interested to see what it could be worth. Okay. So 1,850,000. market cap, good for them. $180 million, 460,000 in income, good for them. They do 498,840,000 in sales, great. Wow, they have a lot of cash. Well, okay, plus 97,540,000. Total debt's 0. Yeah, this is a beautiful 644 million in assets. Total liabilities 89 million. Wow, that dwarf, that's like almost a 10x dwarf. Wow, that's amazing. Okay. So develops, manufactures, and markets minimally invasive aesthetic medical products. Designs, develops, manufactures, and markets non-invasive medical aesthetic products that target an array of procedures, including permanent hair reduction, facial skin rejuvenation, wrinkle reduction, cellulite treatment, skin appearance and texture, and superficial benign vascular and pigmented lesions. Okay, it's headquartered in Yokneam, Israel. All right. Definitely sounds undervalued based off of that. Let's just now take this divided by 76,670,000. $34 stock trading at $22. Okay. Just doing some doodling here. And you can see danger. That does not look good either right here. I think it's going to go down more. Oofda. Okay. Yeah, this is tough. I think we see this come back down to here. Let's do some support here, horizontal. I think there's going to be some good support right there. So around 12-ish to 10 bucks. So let's I don't want to set an alert here, but we're going to cancel this one off of our growth companies. And I've already spent 12 minutes here, so let me just go a little bit faster. Oh God, okay, this company went from $900, which you guys can't really see, if I can do it here. Yeah, $900 down to $3. They're finally turning a profit. Wow. This doesn't lie, this doesn't lie either. What's going on? No insiders are buying. Sales are going up considerably, but I can't trust this, so we're gonna have to pass on that one. Okay, ooh, look at this. $3 up to 30, came back down. All right, what do we got? Oh my gosh. Pays a 7.52% dividend. Is this in the US? It's in Norway. Oh, I really don't like investing outside the US, especially when we have companies that pay a 7.52% dividend. It's obviously inflated because it had a huge run up and the price is still elevated. This stock price needs to come back down, in my opinion. Yeah, I don't see how this is valued anywhere near. Its PE right now is showing that it's a little overvalued, but the same metrics in the future are showing this is undervalued. It's recommended at a 1, which is the highest recommendation you could get. Analysts have a $19 price target on this. Wow. Like, how do they, let's see what it is. Web browsers, Opera browser. So, I don't know. I'm just going to look. Gross profit is looking better and better each quarter. Balance sheet, cash, total assets 964 million, total liabilities 64 million. Wow, I think this company actually looks strong. Okay. Let's run my numbers here. Let's just run my numbers here. Market cap is over 1 billion, 1,170,000,000. Income is 66,880,000. Whoops. Total sales is 380,240,000. Cash plus 52,410,000. Debt is minus 7,830,000. All right, and we're gonna take this and divide it by 88,630,000. $18 stock trading at $13. I could get behind this. Institutions are, get off here. OPRA. Old data shows us that institutions own 16%. New data shows institutions own 16%. Whoa. All right, I think this is probably one of the best growth ones we can look at. With the caveat, we want to wait for a consolidation point. We can see that the stock has been trending down. And so what I am going to do personally is I am going to wait on this one. And I'm going to bust out my actual, we're going to look at the daily. I'm going to remove all this crazy stuff so it's easy to see. Okay, so this is the daily chart for the last year. So, let's go there. I mean, it's probably the most realistic channel we'll see. We want to see the stock price come back to $9-ish, and we also have some good support at $8.35 and right here, right about there. So $10.72 is when I would potentially consider getting in. Again, right here is our apex, which is going to be around the end of January. So end of January, I want to see if it's around $10.72. I think we found our gross, or our, not a gross, our growth stock, underrated growth stock. And we'll look at this therapeutic stock as well, last one. It's a $216 stock. And ooh, looks like it's going on a downtrend, which could be an opportunity. So you can't argue with this. This is beautiful. This is also beautiful. I think we might have found a potential opportunity here. Let's run the numbers. I like this so far. I really like this actually. Just eyeing it. So 10,330,000. 10 billion, yep, market cap. They make 899,800,000. And their sales is 2,200,000,000. Good for them. All right, and total cash plus 961 million at 200,000. Total debt, give us a couple billion at least. Total debt 800 million, not bad. Oops, that was 800,000. Let's do another. Let's do plus 800,000. Okay, minus 800 million. Okay. And we take this divided by 45 million, 800. $296 stock trading at $219. Good value here, in my opinion. Institutions own 94%. That's old data. new data suggests 106%. Institutions like this one, you guys. Look at this, steady, strong upward. That's all we can ask for, really. So now when can we expect a potential time to buy? Let's go ahead to our UTHR. Let's go to the monthly. I've charted this one out before. Look at that. Should have bought back in 2020. Darn it. So the time I'm thinking we want to buy. Actually, let's use a Fibonacci arc here. This is going to be the best use of our time here. Our low right there and our high 283.09. All right. Yeah, so we want to see this come down. Yeah. A couple months of consolidation, actually probably a whole year of consolidation actually. We can see for a whole year in 2021 this consolidated before going from 158 to 283. So there is that. We could also potentially see a move down to this support right here. That would be epic. So let's see if we can. So basically what I have here is, what are these called again? I'm sorry. These are called cycle brackets. So every bottom of the cycle, you can see it touches right here. It came down and touched again. This was down during the GFC, Great Financial Crisis. So this could have been a anomaly, but let's say this is our cycle, and maybe over here our cycle that we want to see. So let's keep that in mind, and let's also look at our highs. So we're there, and then we also have that channel right there that's been respected. There's also this channel too. So a few different ways we can go about this. I'll just keep this here. So we'll come back and check on this one probably in the next 6 months to a year. So I think we found our potentially underrated growth stock. I'm gonna have to say that goes to OPRA. We're 23 minutes in. I guess I'm gonna break this up into 3 different videos so you guys can not get tired of watching the same video for an hour. So that is our underrated growth stock. Let's now go to the next video, which is going to come out in a couple days. This is going to be our underrated income stock. If you guys made it this far, consider hitting subscribe, hit the like or dislike, leave a comment. Hope you're doing well.